Hey everyone, welcome back to the channel. If you are new here, hit that subscribe button so you don't miss out on any real estate investing tips. Today we're diving into a super important topic, one that every real estate investor or potential real estate investor should worry about, and that is cash flow. Now, if you're thinking cash flow is just a fancy term for money coming in and money going out, you are right, but it is also much more than that. And so we're going to break down in this video why it is so important and how it can absolutely be a game changer in your investing to have positive cash flow. All right, so let's start with the basics. Cash flow is just any money that comes in minus any money that goes out. So positive cash flow is going to be all the money that is remaining after you pay all of your expenses. Pretty simple, right? But it's also not just about the money that is coming in and leaving today. It is long term that you're going to want to think about. You want to think of cash flow over longer periods of time. Because if your property isn't generating positive cash flow in the long term, it could end up being a money pit instead of a gold mine. All right, so let's say you buy a rental property and every single month your tenant pays you rent. Sounds great, right? Yes, you have that positive cash flow, but now you are also going to have expenses associated with that property. That can include your mortgage, which would be principal and interest on the loan. It can have maintenance, property tax, property insurance, and unless you are doing the management yourself, you are going to be paying a management company for their time. So obviously we're going to want rent high enough that it covers all of these expenses and some so that you have money left over. Now, if a property does not have rents that are sufficient to cover all of the expenses, then you are going to have negative cash flow. And to be honest, you should avoid these at all costs. Because let's be real, the goal on buying a rental property is to have positive cash flow and passive income. We don't want passive losses. Now, when you buy rental properties, you can bank on appreciation if your house appreciates over time, which historically it will. Now, there might be some ebbs and flows, so you may have to wait for a market to rebound. But if your house appreciates over time, you can sell it and have a gain. But that still doesn't mean that you want negative cash flow in the month that you're living in right now. You're going to want positive cash flow and banking on appreciation. Plus, positive cash flow can level up your investing. I know for me, it has made a huge difference to save all of that positive cash flow from rental and then bank it to go and buy another property. So with the risk of sounding condescending, I'm actually just going to show you a quick cash flow calculation with one of my properties. So for example, I have a property that makes me $1,500 in long-term rental income every single month. The great thing about this property is it also has a studio apartment that I rent out with an Airbnb, and it makes me about an average of $1,000 a month. The mortgage on that property is $850, and that includes principal, interest, property tax, and home insurance. I know, right? Dirt cheap. I bought that house a while ago, so $850 was a steal for a monthly mortgage payment. I also pay utilities, which is about $350 every single month. And to keep the Airbnb a little more passive, I have hired someone to clean the apartment, and that averages about $200 a month. So I have about $2,500 in income and $1,400 worth of expenses. So that means I have positive cash flow every single month of $1,100. Now, $1,100 may not be a game changer right now, but as you compound that over time, it can add up significantly. So that is going to be $13,200 every single year. And over 10 years, that is $132,000 just off of that one rental property. Plus, I have the appreciation on that property if I ever go to sell it. Now, I like to see at least $500 to $600 every single month off of every single family house that I buy and rent out. I want that in positive cash flow because I know I'm going to have some expenses, some bigger things that I may have to change every once in a while, like if a furnace goes out, things like that, right? So if I have $500 to $600 a month, then that'll get me, $7,000 a year in positive cash flow. Now, that's about the average cost of a furnace, and I'm not going to have to do that every single year, so I can bank a lot of that, but then I still have enough money to cover any large unexpected expenses. Now, the great thing about this property is I can use all of that positive cash flow, and I actually just bank it, and I save it up, and then I will go and buy another investment property. And that's what I've done. I went and bought another rental property that had positive cash flow. I took both of the positive cash flow from that, saved up, and I went and partnered on a hotel. And positive cash flow can start compounding exponentially. Now, what if you find yourself in a negative cash flow situation on a rental property? Look at the rent that you are charging. If you have not increased rent over time, then go and increase rent to the point where you can get to a positive cash flow state. Now, you can't obviously price yourself out of the market, so you're gonna have to look at comparables, but that's one way that you can do it. Look at also reducing any expenses that may be there. So if a management company is overcharging you, if you can reduce on some maintenance, if you can do some of the stuff yourself so that you're not paying contractors, things like that, right? So drop your expenses, see if there's ways that you can increase your revenue and get to that positive cash flow state. Now, if you're starting with no properties right now, go and find one that has positive cash flow. So you're gonna have to know your market, know where you're looking, know the average rents, know what that you can charge, and then go find a property that you can get and have positive cash flow. For me, the very first property that I bought that I had rental income from, I actually bought one that had a studio apartment with it. And so I was living on property, but also starting in real estate investing. And that was an easy way to do it. So you could find a house that's a duplex and you could rent one side out while you live in the other. You could find a house that has a basement apartment where you could rent the basement apartment out and live upstairs. That is one of the easiest ways to jump into real estate investing if you have not had a property yet. So in the end, cash flow is going to be your best friend when investing in real estate. Find those good positive cash flowing rental properties and start saving all of that positive cash flow to go to your next property. If you've learned something today, please give this video a thumbs up and don't forget to subscribe so you can level up your real estate investing. Drop a comment below if you have any questions for me. Thanks. We'll talk to you guys next time.